Hi guys, hope you enjoy John's analysis.
Most Bitcoin holders spend years preparing for bear markets. They prepare for volatility. They prepare for negative headlines. They prepare for fear. But very few prepare for the one thing that has historically caused more damage than any bear market ever could: a bad decision. And that's why some investors survive every crash, only to sabotage themselves when the opportunity finally arrives. Today, I want to explain why most Bitcoin holders will lose more from one bad decision than from the entire bear market itself. If you're new here, I'm the creator of Engineered Markets. On this channel, we analyze Bitcoin through the lens of macroeconomics, incentives, market psychology, and long-term decision-making. Not price predictions, not hype, and definitely not emotional reactions. Just frameworks designed to help investors think clearly when the market becomes irrational. Most Bitcoin holders believe the biggest threat to their wealth is a market crash, but history suggests something very different. The greatest losses often happen after the crash, not because Bitcoin failed, because the investor failed. They sold at the wrong time, they abandoned their thesis, they followed fear, or they followed greed. And one decision erased years of disciplined accumulation. Imagine two Bitcoin holders. Both survive a 70% drawdown, both continue accumulating, both spend years building conviction. Then the market finally turns. One holder follows a predefined framework, the other starts making decisions emotionally. Guess which one is more likely to damage his long-term outcome? Not because of the market, because of his behavior. Now, to be fair, Bitcoin carries real risks. Adoption could slow, governments could become more hostile, competition could emerge, technological assumptions could prove incorrect. These risks exist, and every serious investor should acknowledge them. But that's not the point. The point is that most investors spend all their time worrying about external risks while completely ignoring internal ones. And internal risks are often the ones that cause the most damage. That's why every Bitcoin holder should answer 3 critical questions before the next major cycle unfolds. Question 1. What would actually make you sell? Most holders know why they bought Bitcoin. Very few know why they would sell it. And if you don't define your sell conditions beforehand, your emotions will define them for you. Ask yourself what specific event would invalidate your thesis. Not your feelings, not temporary fear, not market volatility. What would genuinely prove you wrong? Write it down. Because if you don't know what would make you sell, you'll probably sell for the wrong reason. Question 2. Are you following a thesis or following a price? Many investors think they're conviction holders until the market moves against them. Then they discover they were actually following price all along. If Bitcoin fell 50% tomorrow, could you explain why you still own it? Without mentioning the chart, without mentioning influencers, without mentioning hope. Could you clearly articulate your thesis? Scarcity, monetary debasement, network effects, institutional adoption, whatever your thesis is, can you defend it? Because if you can't explain it, you probably won't be able to hold it. Question 3. What will you do if you're right? This is the question almost nobody asks. Everyone prepares for failure. Almost nobody prepares for success. What happens if Bitcoin enters another major bull market? Will you take profits, and how much, based on what criteria? Will you hold? Will you rebalance? Will you do nothing? What are the rules? Because if you don't create those rules in advance, greed will create them for you, and greed can be every bit as destructive as fear. The next cycle will not simply test your conviction, it will test your decision-making. And the market has a way of exposing weaknesses people didn't know they had. The investors who succeed over multiple cycles are rarely the smartest people in the room. They're usually the most prepared. Preparation beats prediction every single time. And that's exactly why I created the Bitcoin Holders Bible. Because I noticed something strange. Most Bitcoin holders spend thousands of hours consuming information, but almost no time building a decision framework. And information alone doesn't protect you from bad decisions. Frameworks do. Let's be honest about what's actually happening out there. Some holders bought Bitcoin and couldn't tell you why beyond a feeling that they were missing out. Some holders have conviction when the chart is green and panic the moment it turns red. Some holders have never once written down what would make them sell or what would make them buy more. Some holders are following price, not principle, and they don't even realize it yet. Some holders feel the fear of missing out every single time Bitcoin moves, instead of feeling the calm of already having a plan. And some holders have a thesis so vague that the first sharp correction will dissolve it completely. None of that is a character flaw. It's simply the predictable result of never building a framework in the first place. Now let's put this into perspective. Most Bitcoin holders spend years accumulating. Some 5 years, some 10. Some have invested tens of thousands of dollars. Others hundreds of thousands. And yet almost nobody spends any time building a decision framework for the asset they're trusting with a meaningful portion of their wealth. Think about that for a second. A single FOMO-driven entry at the wrong moment could cost more than this book. A single panic sale during normal volatility could cost more than this book. A single moment of not knowing what to do and freezing could cost more than this book. A single failure to explain your own thesis, leading you to sell at exactly the wrong time, could cost more than this book. In fact, for many holders, one bad decision could cost more than every Bitcoin book, newsletter, and course they'll ever buy combined. That's the real risk, not lacking information, but making decisions without conviction, without criteria, and without a framework. This is why I built the Bitcoin Holders Bible as a complete field manual, not just for decision-making psychology, but for understanding where Bitcoin actually is in its cycle before you make any major decision. Inside, you'll learn how to identify accumulation, expansion, euphoria, distribution, and markdown phases. You'll learn how to read the same on-chain indicators professional analysts monitor, including NUPL, RHODL, MVRV, and LTH SOPR. Because price alone doesn't tell you what's happening beneath the surface, the blockchain does. And once you can see the cycle clearly, FOMO loses its power over you. You'll also build your personal Bitcoin thesis, your conviction framework, your sell criteria, and your decision rules, all before emotions ever enter the equation. Because the investors who survive multiple cycles aren't necessarily the ones with the highest IQ. They're the ones who already know what they'll do and why they're doing it before the market forces them to decide. The Bitcoin Holders Bible normally sells for $97. And frankly, if it prevents even one FOMO-driven mistake, it pays for itself many times over. But because you're watching this video right now, you can get $50 off using the code DIAMOND50, bringing your price down to just $47. That's less than the cost of adding a tiny fraction of a Bitcoin to your stack, less than most people spend on a dinner out. And let's be honest about the real comparison here. It's not $47 versus a book. It's $47 versus the cost of operating without a thesis, without criteria, and without conviction, the very things that make holders sell at the bottom and buy at the top. For many investors, that cost has historically been thousands of dollars, sometimes tens of thousands, sometimes far more than that. And here's my promise. Read it, complete the exercises, build your framework. And if you don't believe the Bitcoin Holders Bible helps you think more clearly about your position, simply send me an email within 30 days, and I'll refund every penny. No forms, no arguments, no hoops to jump through. Because at the end of the day, this isn't really about buying a book. It's about protecting years of conviction from one FOMO-driven mistake, one moment of not knowing what to do, or one decision made without ever understanding your own thesis. If you'd like to build that framework before the next cycle accelerates, click the link below and use code DIAMOND50 while it's still active. And remember, most Bitcoin holders won't lose the most money during the bear market. They'll lose it the moment they make a decision without conviction.